Hello, Jim here. Trading options is a great way to make some extra income every month. Today, I want to talk about all the different types of income streams. I want to talk about my strategies. And at the end of the video, I'm going to share with you how I did last month. I'm going to go over my trades and then talk about not just the trades, but dividends and interest and what the whole picture looked like when you put it all together. So stay tuned. I think it's going to be well worth your while. Okay, let's jump right in. It's been a pretty rough couple of days. We were down yesterday, and I believe the day before. We were down this morning and then up later in the day. It rebounded nicely. I think that's going to continue. It kind of marks higher volatility, and I think we're going to have that probably up until the Fed cuts rates. I still think they're going to cut rates probably in September. Probably a quarter point. They may surprise us and do a half point. I do think unemployment's higher than a lot of people realize, and I think the economy is struggling more than what the reporting is showing or what the analysts are saying. So I do think potentially they could surprise us, and once they do a cut in September, I do think we're going to have a bit of a rebound. I know the market has probably already factored that in, but I wouldn't be surprised to see us again kind of head up higher. We do have a lot of uncertainty coming up later in the year with the election and everything else. So I think the theme of the day is to stay safe, to not try crazy trades, pick good companies, quality companies. Again, all those things I talk about in previous videos, pick a company that has low debt, good return on investment, or equity, not investment, return on equity, return on asset, good year over year earnings. Just, find companies overall that are doing pretty well and also are not way overpriced. There are a lot of companies that have 70, 80, 90 PEs. I think those are going to come down. A lot of them have come down in the last day or two. So find good companies that are at good prices. And then when you pick your strikes, pick strikes where you want to own those companies. It makes it a lot easier dealing with a market correction. If you know, well, I'm okay with owning that stock or that ETF at that particular price, because I know down the road, 2, 3, 4 years, it's going to be a lot higher than what it is currently or at that particular strike price. So just kind of wanted to start out with that. Now, when you trade options, you end up, or I feel like you end up with many more income streams. I believe for me, I have quite a bit of covered call premium that comes in. I also have put premium that comes in, and it works out quite well on a monthly basis. So, and then when you pair that with dividends and interest, it can be a substantial amount. I learned from my grandfather many, many years to keep your portfolio intact, keep your assets intact, and live off the income, live off the interest, the dividends. And I believe at that time he was not trading any kind of option. So when you add in option premium, especially if it's fairly safe trades, you end up with not just one or two forms of income. You end up with 4 or 5, maybe even 6, depending on how you look at it. So, and it's been a pretty big amount for me on a monthly basis. You'll see that at the end of the video when I go over my trades and the amount of interest and dividends that I bring in on a monthly basis. Now, one thing I have noticed is, for me, I do better during down markets. So selling options, I think it lends itself well to, potentially outperforming the market. When I looked at my returns in 22 and 23, I did better for those 2 years than I did. When I combined those, I beat the S&P. When I just looked at 23, I didn't beat the S&P. When I looked at 22, I did beat the S&P. And I think that's because of bringing in so much option income. And I see that happening again with it. It also relates a lot to the fact that a lot of my holdings that I've had for many years are, quality companies. So I do think when there is a correction, there is a flight to quality. And we had some of that yesterday, like Coca-Cola pretty near an all-time high. Same thing with I think Southern Company and Procter and Gamble, and some of the other big steady companies. So just something to keep in mind. When you trade options and you kind of keep refining your process, you end up doing potentially better. At first, I did all my trading in my taxable accounts, and then later I switched to doing primarily covered calls in my taxable accounts, and I do puts, cash secured puts, vertical put credit spreads, iron condors in my retirement accounts. That tends to work out pretty well, especially with the fact that I don't have a tax impact in those retirement accounts. Now, my taxable, I do, but I can balance it out really well. If you're working with Schwab, if you go to the history page, you can actually, there's another tab and you can see your realized, unrealized gains and losses. And that's been very helpful too. I can literally see, well, how am I doing in my two accounts? Am I going to be hit tax wise? And I've actually compared it to TurboTax. I compared the values to what was uploaded to TurboTax, and they did coincide with one another. Another important point while we're going through this kind of crazy market recently is I'm building up more cash just in case we do get another good dip for the opportunity to potentially get into some companies at really good prices, at bargain prices. That's what Warren Buffett is doing. I think he's got more cash than he's had in many years. So it's something else I encourage you to do. Build up that cash so that if we do have a major correction, one, it'll help you weather the correction. And second, it'll give you the opportunity to get some stocks or ETFs at really good prices, at bargain prices. And then also use multiple option strategies. I find when we go through a correction, my calls become very profitable and I can close a lot and then be ready when the market goes the other direction and it shoots through the roof. And the reverse is true with puts. When the market's going through the roof, then the puts become very profitable very quickly and you can close them a lot sooner. So having a good, healthy balance of both puts and calls really can make a big difference. And then also using different option strategies. There's been a lot of cases where, maybe I'm doing vertical put credit spreads on a particular stock, and then suddenly it's not working anymore. So it worked last month, but not this month. So I might try a different strategy. Maybe I'll go to what's called an iron condor, where you set an upper limit and a lower limit, and you want the stock to stay in the middle. And I found that can be profitable for a while, but a lot of times what's working now may not work, down the road. So I encourage you to try different strategies as well as try different securities, try different stocks, or if stocks aren't working, mainly maybe earnings is impacting you. Look at ETFs. You don't run into earnings with ETFs. Now that is one thing I'm also doing. We're in the middle of earnings season, so I'm avidly trying to avoid earnings, so I prefer to make a trade after a company has made earnings, and especially if it's a good company that got hammered, then I would do a trade after earnings and try to set the expiration before the next earnings. I typically like to go like 45 days. So that's something else that I encourage you to do, to be really careful with earnings, because again, it could have drastic impact on your portfolio or on your options trades. And then what's really important is having consistency and patience. If you have a bad month and you have several trades that get assigned to you, or, maybe you take some big losses, don't stop, keep trading, get back in the game, because long term you're going to do better. Every once in a while you'll have a few losses, but the big mistake you can make is not continuing to trade. But adjust, learn what mistakes you made. Why did the trade not work out? Could you use a different delta? Should you have used a different security? Did you go, look at the stock that was too high priced, or maybe the stock, one lesson I learned, had too much debt. So look at all those criteria, understand what might have gone wrong, but then continue to trade, continue to adjust, kind of like righting the ship. Maybe you you went off course a little bit, but stay in the game, continue to make trades, and then be patient. Sometimes it takes a little bit of time for a trade to work. I like to tell my members to not really worry about early assignment unless a stock is what I call 10% or more in the money. So if it's a $100 stock or you have a strike at 100 and the stock goes down to 90, there's a good chance you're going to get early assigned, or the closer you are to expiration. But don't panic. A lot of times when you get maybe 3, 4, 5% in the money, suddenly your P&L will be really negative. You might look at that and say, wow, I'm taking a huge loss. And then you might panic and try to get out or close the trade at a big loss. So you've locked in your loss. I've had a number of securities that have gone in the money and then come back out. And some have gone in the money and then come way back out of the money, and where I can close them or they expire. So again, be patient. And that kind of leads me, before I jump into my June trades, to, I share all this with my members. I share my guidelines, my strategies, my spreadsheets, my planning worksheet. All that is shared with my membership. If you want to learn more, look in the description for this video. So details are there. It's fairly reasonable, and you get direct access to me. And if you end up at one of the 2 or higher levels, you also get Discord, and you can see other people's trades. I have people trading futures. I have people trading 0 DTE, all different types of trades. I've actually learned quite a bit watching other people make their types of trades, especially the 0 DTEs. It's kind of news to me. Like, I had one member that did really well yesterday because he put in some call spreads on SPY when the market was diving. I didn't even think about that, but it was really interesting to see him make a really good profit on that. So again, if you're interested, take a look. And as always, please hit that like button, subscribe. I'm trying to grow the channel. I want more people to understand that they can do this and it can make a world of difference. You can retire a lot earlier or become financially independent, so you can have what I like to call FU money, meaning do what you want to do with people you want to do it with, and not, have to be beholden to someone else. So just my little rant there. So let's jump into the next part of the video, where I'll go over my June trades and how I did for dividends and interest and overall for the month. Okay, let's go ahead and jump into my trades. I'm not going to go over each and every trade. I'm just going to do a quick analysis. So I had 37 trades. I kind of had a pretty wide range of different companies that I traded on. The first one was a MetLife vertical put credit spread, and that was fairly profitable. 283.30, 55% ROE. Then I did a Bristol Myers. This was just a covered call that I rolled. Bristol Myers is not a company I recommend right now. They've been kind of hammered recently, but I'm still able to sell covered calls, and I believe right about at the cost basis. And then Best Buy, I had 2 different vertical put credit spreads set up on Best Buy. I closed both of them, but they were very profitable. I'm looking forward to the opportunity to sell more vertical put credit spreads on Best Buy. Currently, it had good earnings and it shot through the roof. So hopefully, if they come down a bit, I probably will do some more trades on them. IWM, which is Russell 2000, I did an iron condor. This was before Russell 2000 shot through the roof. I believe it went over 220. But this was, the puts were 186, 178, and 222 and 230. So as long as it stayed between 186 and 222, it would expire out of the money. And this was a new iron condor, and it was near a 15 delta. A lot of times, if it's a stock that I'm going to do an iron condor on, I'll do it like a 10 delta. And I brought in, it looks like $254, and it was 94% return. One of my better. Then I had DVY. This is an ETF that I like. It's, I believe it's the iShares dividend ETF. It's one I've owned for many years. I've got a couple hundred shares, and Wouldn't own more, wouldn't mind owning more. So I saw the 118, 108 vertical put credit spread. Took a little more risk for ETFs. I will take a bit more risk, expiring in 920. So I did go a little farther out. So I brought in 207. Required capital was 1792, which again is just the 2000 minus the 20730. And then DTE was 107. So I did go a little farther out. I'm finding more recently I'm not quite going out so far. I'm trying to keep it more like 45 to 60 days. Tapestry, this is a vertical put credit spread, 42.50.35, so a 7.50 or $7.50 spread, expiring on 6/21, and it again 196, 77% return, so good trade overall. I'll probably end up owning Tapestry, and I probably will only own maybe 200 shares of it. Polaris, this is the only assignment I had all of June. I had 100 shares assigned at 90, but with all the different trades I make it, my cost basis is right around 80. And at the time, the stock price was pretty close to 80. It was kind of it broke even. It wasn't a loss for the month. Now, recently, earlier this week, Polaris got hammered because they missed earnings and they dropped significantly. So, but it was assigned. It was my only assignment. And then I also did a cash secured put at 80 because, again, I want to own another 100 shares, so probably 200 shares of Polaris. I think long term they're a very good investment, and it brought in 278, or no, 126. So it typically brings in pretty good premium. You got to remember that's for one contract. Then NVIDIA, this is a covered call. I've owned NVIDIA for a long time. This was for 139, 719. The premium was very good, 203. The capital required was only 435. I've owned these so long. My cost basis is really, really low. At what, $43? And this was a 437% return, mainly because of the low cost basis. So next we've got DocuSign. I'm a software developer. I'm currently working on a product for a client that's going to compete with DocuSign. So I like to keep touch with what they're doing. So this was a vertical put credit spread roll, 52.50, 42.50, and I've been rolling at the same pricing, 52.50, 42.50, and I brought in 325. I've brought in over 600 on this trade since I started it. This was like a 70% return. So when did I start it? Back in April. So 3 months, I've brought in some pretty good income on it. IJR, another ETF that I like. This is a mid cap. Instead of wanting to own IWM, I prefer IJR. So I sell IWM to make money, and then I like to purchase IJR. So I might take a little bit more risk here so I can own more of it. The weird thing is it just always seems to expire outside the money. So I might take even more risk, but it was an 87% return, 217. Then Zoom, I've had a bunch of trades with Zoom. This is a vertical put credit spread roll. Still have this trade, and I kept the strikes the same, 65.55. Brought in 245, so I brought in 564 in this trade. So my cost basis is pretty good in Zoom. I probably will get assigned some more with Zoom. This is July, and I have not been assigned Zoom in July or even any more Polaris, but I'm thinking I'm going to get assigned Polaris here soon. Another NVIDIA, this is vertical put credit spread. So NVIDIA did drop, so I decided to do a spread on them at 15. It's a 15 delta. And I brought in 239, and this was like a 75% return. And as NVIDIA, I really like NVIDIA under 100, so I might do a lot more trading on it under 100. I do think it's a bit pricey. Coca-Cola, I'm selling some Coke every week. I'm trying to generate some income from it. I'm buying some land, or bought some land, and now I'm building on that land, and I want to cash flow it as much as possible. So this was a covered call, 65.816 was the expiration. And I brought in 245. And this is based on at that time, what the price of Coca-Cola was, which was 63. My cost basis is much, much lower than that. It may be more like a tenth of that, but I just like to show it based on what the current value of Coca-Cola is. So one interesting tidbit about my Coca-Cola is I've owned it since my grandfather gave me the shares when I was a teenager, and it split 3-for-1, and I think it split 3 other times 2-for-1. So the fact that it split so much became really, it turned into a lot more shares. So if if that's another factor to look at with companies, if they like to do splits like Coca-Cola, once it gets into the $70 range, they typically will do a split pretty soon after. So I wouldn't be surprised. Like I believe Coke got up to almost 67 today. If they get to 70, they're probably going to announce a split pretty soon. IYR, this is, I believe, the real estate ETF. And I've been doing these too, 85.75. And it's been pretty near the money, but it stayed out of the money. So, and I brought in some pretty good income with it. 228, which is pretty good. And it's like 47% return. So a lot of times my ETFs, the returns are a little bit lower. Oracle, I did this 110, 100. And they had great earnings and shot through the roof. So I believe they're like in the 130s now. So I was able to close this. IWM, this is a vertical put credit spread. So a lot of times I'll do iron condors and I'll do vertical put credit spread. So I did 192, 182, and this was about the time that IWM was shooting up. So I believe I closed this in July, but this was also very profitable. 161, 89% return because of the shorter DTE. Then another Polaris. This is a cash secured put that at $80, and I think I rolled it twice in the same month and brought in 278. So Polaris has some pretty good premium. ConocoPhillips, I've traded them quite a bit around this same 105 to 90. I think this was a mistake. I think I meant to do 190, but I did 105.90, but it didn't hurt me. This is another one I believe in July that I closed, and it brought in 187.60, which is like a 70% return. Cisco, I've traded Cisco a lot. I own 400 shares. This has been in and out of the money. So I rolled it. It was originally, I believe, a iron condor, and I rolled it into a put, and now it's a cash secured put because the call side ended up expiring. This was, it stayed pretty low. Cisco stayed around 47.50. So, and this was one of those cases where I had to make a phone call to get Fidelity to break it up and manage it. We'll talk about that at the end of the video. But I brought in 167.28, so not a bad trade. And then PG, this was like a leap roll. So I rolled it from 117.25 to 116.26, up there from 165 to 170, and brought in $458. Now, being with such a long DTE of, what is that, 578 days, it was still like a 3.6% return, which I think about doubled the dividend, or was right there. ODFL, this is Old Dominion. I did a vertical put credit spread. This is one I got from one of the members. They made a similar trade, and I was like, wow, I like Old Dominion. And since then, this one has expired. It literally expired last Friday. And it worked out really well. It brought in 247, so a good trade, 166, which is a really good return. And then NVIDIA, another covered call roll. I rolled it from 139 to 142 and brought in another 218 in premium. Then another IWM, another vertical put credit spread, 185, 175. So I do a lot of those for just income. Whenever you see IWM, I primarily are doing those trades, if they're an iron condor or a vertical put credit spread, just to make money with. I don't plan to own any IWM. Zoom, another vertical put credit spread roll, 60.55. This might have also been part of an iron condor at one time. And I've done pretty well with it. even though, well, I only made 31. I did get a little nervous with Zoom because I believe it got into the low 50s. I believe it's been oversold. I think it's going to bounce. Same thing with Intel. I think Intel's been oversold. This was a covered call leap, so I did it out to 12/18/26. Brought in $798. This was for two. So it worked out really well. Brought in a lot of cash. Like I mentioned earlier, I'm trying to bring in a lot of cash so I can finance this building of this, the construction of the building on the property I recently purchased. TSM, that's Taiwan Semiconductor. I started making trades with them a couple months ago, I guess in March. And then I closed it. And I typically don't pay much to close. I paid $17 to close it, so it was very profitable. And I've recently done another trade on them. So, and I'll continue to do more. Next is Polaris. This is our covered call. So the 90, the shares that were assigned, I sold the covered call at 90. A little bit more risk, but at the time it was 80. So I felt like, well, $10, it's pretty far. And it was 209, and it's like a 10% yearly return. And I think they pay like 3.2, 3.4 dividend. So the covered calls have worked out pretty well. ITB, I think this may be construction. What is it? Real estate construction. The iShares ETF, I believe. I might be off on that, but it was 93.83, 10 spread, 816. At the time, it was 100, and brought in 189. So you can see probably a third of my trades, maybe a fourth, are like ETFs. And I do like trading ETFs. They've also been very pricey recently. Now, Google, this was what I call my shielded wheel call. This was just the call side of the shielded wheel. And if I did a video on this a couple weeks ago, or it might be more like 6 weeks ago. And so I bought 100 shares, I sold a covered call, and I did a vertical put credit spread all at the same time. And it worked out really well. I think I purchased the shares for 171. Then I brought in $400 or $500. And this was, I believe, this was just the call side of the shielded wheel. And then that brought in an additional 336. So it brought in quite a bit of premium. And so total, I brought in 626 just with the covered calls on Google. And I like Google. Of course, being a YouTuber, I like their YouTube. I also like their YouTube TV. I tried other services, but went back to YouTube TV. Paychecks, another good company. A vertical put credit spread, 115, 105. This one, I believe, is still out of the money. It might have dipped a bit with the market correction in the last day or two, but I think this is it here. So the May 282, 1717 required capital, 117 return. So some of these new companies that I've traded on now, Path, this was, I got signed a bunch of Path back in May, and it's, now I'm selling covered calls, and I did okay with the covered calls. I think my cost basis is right around 13, maybe 14. And I'm expecting Path to get a bounce. They missed earnings and got hammered. They did mention layoffs. I think they laid off 10% of their people, unfortunately. But I do think they'll potentially get a bounce. Hopefully I'm not wrong. Hopefully this isn't one of my losers. And then more Zoom trades, more covered calls on Zoom at 65, and brought in some pretty good premium, 197 and 268. And then Chewy, which is probably my most interesting trade, I think, for this month. I did a very thin spread. I did a 22.50/20, 4 contracts, mainly because it's inexpensive. If a stock is inexpensive, I will typically do more contracts. At the time, it was 25.86, and I brought in 282.60. My cost basis, which was the 250 times 4, so 1,000 minus the 282.60, I had a 293.5 0.43 return, primarily because of that small spread. Now, I had them on my watch list for a long time. This is one of those examples, and I have quite a few that aren't making money yet, but I see the potential, so I add them to my watch list, which again I share with my community. And they just recently started making some money, and they're doing pretty well, and I believe they have very low debt too. So overall, a very good company. So let's look. Here's a summary of the trades. So I did 37 total. I did 11 covered calls, 3 cash secured puts, 20 vertical put credit spreads. So that's 23. That's a bulk of the trades. I did 1 shielded wheel and then 2 iron condors. So pretty interesting breakdown. I did not have any poor man's covered calls or any reverse jade lizards, which is just an iron condor. But if you own the shares, you don't need to buy the call protection. So I made 78.97.22 for the month, just in premium, options premium. The required capital, if you add up all the required capital, is 174.83. My return for the month was 4.63, which you'll see in a minute, that's higher than what my return was on each individual account. But for a lot of my accounts are near or fully invested or close to fully invested. I own a lot of stocks. I own a lot of ETFs. I even own some mutual funds. So this is probably using, I'd say, 60% of my cash, and only maybe a half dozen are in the money, maybe a little more than that. So overall, for my Schwab brokerages, I brought in 2142, which is 0.37% monthly. So a yearly would be like 4.41. So again, I get most of my dividends from my Schwab brokerages, and they're mostly invested. I don't have much cash, and that's why that's a lot lower. So a lot of these are from covered calls. Fidelity IRA, that's most of my puts. I did 1.39 in 1 month, which is nearly 17% on a yearly basis. So you can see the beauty of how much you can make. When I first started calculating this or keeping records, I've done anywhere from 0 to 3%. So I think the best I ever had in one particular account was right around 3%. And then I have Fidelity Roth. I only did 1 trade, so it wasn't much, but even that makes a big difference on a yearly basis. Now this is, multiplied by 12, but I'll probably have more trades. I think in July I probably had 3 times that. So then total premium 78.97. When you look at it from all my accounts, it's like 0.76%, which is like almost 9% on a yearly basis. And then interest and dividends, I brought in 35.75, and that's interest and dividends, and that includes from all these accounts above. I literally went through my Schwab brokerage forms as well as my Fidelity. Fidelity is kind of harder to read their forms. I don't know. They don't make it as easy. It seems like Schwab, their interface is a little bit easier. Even looking at performance is a bit easier. So the total income was $11,472.32, which that's all income. So that doesn't include any appreciation that I had with the different stocks and stuff. Some of the notes, Polaris broke even at the end of June, but then it just, like I said, it dropped big time in the last couple of days. And then the fact that I cannot manage iron condors and Fidelity has been a nightmare. I spent hours on the phone with them, and they had to break the iron condor up, and then they actually had to do the trade because even after that I couldn't do the trade. So my suggestion is, if you're with Fidelity, do the iron condor as 2 spreads. It's an iron condor. You have a call spread and a put spread. I personally take less risk on the call side, mainly because I've been through that before, where you get loaned the stock, and I just don't want to go through that again. So I always take less risk. I may do a lower delta on the call side, so maybe a 10 delta on the call side and maybe a 15 delta on the put side, something along those lines. And then I had lowered my goals, so I did reach I think it's 7,000 monthly, and I was able to reach that. July, I think I'm going to go above 8,000 potentially, but I'm not going to change it. I'm going to continue to leave it as goal being 7,000. So that's what I wanted to share with you guys. It turned out to be a fairly good month compared to all the assignments I had back in May. And right now, coming towards the end of July, and I have not had any assignments in July. Now, I do think Polaris may get assigned to me. So, as always, if you have any comments or concerns, please leave a comment. I typically will address them within 24 hours or 48 hours. And as always, please hit that like button, subscribe. If you want to look at my memberships, take a look. In the description of the video, there'll be a link to get to Patreon to see my memberships. And I will make this available to my membership. I typically will also release the spreadsheets, to my membership so they can actually see these firsthand and potentially use this for their own uses. So thanks for joining me, and look forward to seeing you next time.